One specific company, Aanjaneya Lifecare, and Dr. Kanan Vishwanath, who's the Vice Chairman Managing Director of the company, joins us. Their fundraising plans, and there has been a private placement made by the company. Let's discuss those with the management. Mr. Vishwanath, thanks very much for taking out the time. First up, the company has issued about 13 lakh shares to Apex Drugs. Is this move, investment-led? What is the kind of partnership that you have with Apex post this placement?
Good morning. We are looking to buy out the assets of this company called Apex Drugs and Intermediates Limited. So based on this buyout, we are giving them equity shares worth about 65 crores, and rest of the tie-up would be through debt or would be through equity, which would be through a QIP.
Right. And when would the buyout be complete? When would you integrate the books?
We are looking to complete the buyout within the next 10 days. Most of the documentation is in process, and we should close it by the 7th of April.
What kind of funds are you looking to raise, Mr. Vishwanath?
As far as our QIP is concerned, the investment committee as well as the project finance committee has come in with certain recommendations to the board. So we are having a board meeting on the 2nd of April. So we would be looking at proposals for a QIP which would be around the size of $50 million to $70 million.
50 to $70 million. And what kind of dilution, equity dilution, does it lead to? And consequently, what does it do to the promoter shareholding as well?
This would be actually discussed in the board meeting, and we would be able to talk about it post Monday.
No, which is fine, but I'm sure you have a basic sense of, if you indeed plan a $50 to $70 million fundraising at or around the current market price, what's the basic dilution that it will lead to? I mean, what's the maximum that you would look to dilute?
We would be looking to dilute anywhere between another 10 to 20%. So we would be, currently we have 61% holding, so we would like to bring it down to anywhere between 45%, 48%.
And what's the pressing need for the funds to reduce your shareholding by that much, Mr. Vishwanath?
It's for our ongoing capex needs plus the acquisition which is happening right now. And it could also lead for a potential acquisition of a brand or an assets in India or abroad.
Have you zeroed in? What's the size of the asset that you're looking at?
No, there are a couple of proposals which the project finance committee is looking at, and we would be discussing on a board meeting which is scheduled on Monday.
I just wanted one small clarification, Mr. Vishwanath. Did I hear you say $50 to $70 million? Because if you indeed do look to raise $70 million, if you go the full hog at the current market price, it's almost 50% of the market cap that you have, which would lead to a substantial dilution. It won't be a 10 to a 15% dilution.
The discussions, we've received various proposals right now from different investors as well as our advisors. So we would be looking at them at a board meet, and then we would take a call what would be the size of the fund and what would be the size of dilution. So we would come with a correct picture on Monday.
Which is great. We will talk to you then as well. But I'm just trying to place 2 and 2 together out here. And is there a possibility that the interest that you've gotten for your QIP is at either at a price much higher than the current market price, or the fact that the dilution will be much higher than what you are envisaging?
No, it would be at a slightly higher market price because we are looking at forward earnings. So, we have quite a few options as discussed earlier. So, at this point of time, it would be correct for me to comment on it.
Great. Okay.
Post the board meeting, we'll be able to give a much clearer picture.
So we will do that, but just in fact, a couple of questions. One, since you mentioned that this is being probably done on future earnings, what's the guidance that you have? Just talk about FY12. What do you think you will end the year with?
The post-Apex asset buyout, the combined size of the company, if you say standalone figures of Aanjaneya and Apex put together, the size would be about some 670 to 700 crores top line. with the EBITDA margin of about 20 to 22% and the PAT margins of 10.5-11%. So this would be the standalone balance sheet size as of 11-12 is concerned, and Aanjaneya is going at about say 20-25% per year. So we could easily figure out what the guidance would be for the next coming quarters.
Okay. What about the financial year as a whole? Is there a number? Is there a target on how much would you deliver on an earnings per share basis for FY13?
At this point, it would be tough for us to comment on it. Probably after the board meeting, once we have everything clear, we would have some comments on the earnings, etc.
Okay, just one final word, and we will talk to you, of course, post your board meet is over, Mr. Viswanath. But what we've seen in the market of late, that the promoters are buying a lot from the open market. I mean, is there a target that the promoters will go the whole hog of 4.9% or whatever they are allowed to do? And is this in lieu of the QIP coming in and therefore reduce the dilution?
No, we believe that there is substantial growth in the company, and if there is some stocks available in the market, then the promoters should buy them. One, because it gives confidence to the other investors that there is a growth story in the company, and the company is doing well. QIP placement, it's in a very early stage, so whether it happens or not, this trend would continue. And if we have an opportunity, we would buy out the limit what can be done in a year. Okay,
Mr. Viswanath, we'll of course talk to you again post Monday, so maybe on Tuesday morning. All the best with the board meet. Do give us the details as and when it gets completed. Thanks so much for taking the time out.